But your note is an optimistic note, isn't it?
It's just a factual note. So I was in Houston last week, went to the airport downtown, went out to Galleria, back to the Hobby Airport. I didn't see the hurricane once. You look everywhere, it's not there. It's come back completely there. And then in Florida on the West Coast, still a lot of trees down. But unemployment claims you saw yesterday, they're down. The economy is improving. And then our company surveys, which you're looking at there, they're up. So the economy, as it gets into October, is coming back from the hurricanes.
I believe you learned at C.J. Lawrence a few years ago, the market gets out in front of the thinking. Is that what we're seeing with this risk-on feel? Is a market with a constructive view for 2018?
It's a little bit out front. It's also just feeding off what's happening. It sees that it's coming back. It saw the car sales you saw, 18.5 million. Bond yields are edging up a little bit. The dollar's edging up a little bit. Copper's over, what, $2, $3 this morning. And so it's all moving together.
Right, but Ed, when you look at the wage growth, and I know this is what people are looking at for today, wouldn't the wage growth also be skewed by hurricanes, or is that kind of like separate?
People have studied this thing, completely. They've sucked every ounce of air out of it, and they're right. So we look at the past hurricanes, wages weren't affected. Unemployment wasn't affected. It's unchanged. Jobs were down. But on the wages, we're looking for 0.3 on wages, but wages, as you know, are the key of all this stuff. Wages have been stuck at 2.5%, and the next gear in the economy is to have wages go up to 3.5% and to have inflation pick up to over 2%.